All right, guys. We are here today. Good morning. Market is slightly green, mostly on the NASDAQ. Nvidia just turned green today. We did have Target earnings, and I'll put Target chart up in a second. But yeah, you can see the Q slightly green, flat day yesterday. As I expected, I expect us to get more like sideways pressure today, mostly just because we got the FOMC Fed minutes report at 2 p.m. today, and that probably will drive choppiness, I think. Again, we did have Target earnings, so TGT. Coming out, I think Target's gapping up from the earnings, if I remember correctly. Yeah, Target up big, up to 166, 167s. Yeah, we'll see what we get, guys. We got the Fed minutes report today. Let me get some music playing here. And I think we got some other stuff. So yeah, Target posted 257 EPS versus 218 expected. Revenue of 25 plus billion, a little bit lower than expected revenue. They had comp sales show up at 2%, digital sales at 8.7%. If you want to look at Target earnings, Target gapping up big here. And again, I'm not going to say I told you guys about Target, but Target looking pretty good. Mortgage rates came out today as well. The 30-year mortgage rate came in at 6.5%. Last time it showed up at 6.54%, so continuing its decline down. We also had analog devices. Analog devices showed up at 158 versus 151. Expected revenue of 2.3 versus 2.27. Gross margin, adjusted gross margin at 68%. So yeah, so far so good. Yeah, Target gapping up on good earnings. Yeah, Macy's down a little bit. This is why you shouldn't, like, a lot of people get emotional about Target and they start to, like, trade based off of their political bias, right? It's always a horrible idea, you know? You got to separate yourself from any political bias. Like, you know, I feel like there's two people in the world. One side that recognizes that both political sides will cause deep bias and you know, will try to pull you in their direction with bias, right? None of them are telling the truth. Right, the other side recognizes this and kind of stays away from it. Some people root for political parties like their football team or whatever, and that makes them lose interest in good trades. Like Target, man, I've been talking about Target since like 105. You know, Target, relative to that, is up 60%. Target, every time you go to the store, every time I go to the store, it's packed. It's super busy. I buy 3 things. It's freaking $500. They're making money. A lot of people are still going there. And you know, people get pulled in all these different directions, but good trades are good trades, I think, you know. You think a rematch between Izzy and Dricus will happen? No, I don't think it's going to be in there. I don't think it's going to be there. I don't think there's I think the UFC, in terms of where they hold their pay-per-views, are going to look at like interest, for lack of a better word, and also, like, yeah, I don't know. I just don't think they're going to hold one in South Africa. Yeah, I'm looking at Polestar stuff. Yeah, so again, we got the FOMC minutes report today. Bowman spoke yesterday. She says inflation progress seen but remains above 2% goal. Labor markets loosen with historically low unemployment. Wage gains exceed inflation target. Gradual rate reduction possible if inflation trends sustainably towards target. Emphasize patience to avoid overreacting. They said they must consider the totality of data as employment and price stability risks balances, sees upside inflation risks and possibility that hiring strength and unemployment rise are misleading, emphasizing close attention to price stability and caution and policy change. This is all from Bowman. I believe she said this yesterday. Let's check other stuff. People are also talking about revision news. All right, so today the Bureau of Labor Statistics released a significant job market revision that could have major implications for the economy. The report suggests a large downward revision to job growth figures from April to March of this year, with estimates indicating a potential reduction of up to 1 million jobs from the previously reported data. It's based on quarterly census of employment and wages data, which revealed job growth may have been overestimated during that period. The revision could show that monthly payroll growth was overstated by 50 to 85K on average. This update is the largest downward revision to non-farm payroll since 2010 and raises concerns about the labor market. Implications of this revision are significant for the Fed as it prepares for upcoming policy meetings. So and again, the big thing is the Jackson Hole Symposium on Friday. So they did revise, but this is from April of last year to March of this year, right? And so this, take it with a grain of salt in that regard. But yeah, about 50 to 85K on average revision, largest since 2010. So it's definitely not nothing for sure. TJ Maxx just posted earnings. TJ Maxx posted 96-cent EPS versus 92 cents expected. Revenue of 13.47 versus 13.31. Here's TJ Maxx. Or here's Target's numbers, and then here's TJ Maxx right here. TJ Maxx just raised fiscal year guidance for pre-tax profit margin and EPS also. So that's relevant. Just kind of sitting tight looking at everything. So the labor market report already out. The FOMC minutes report's at 2 p.m. Eastern time today. 2 p.m. Eastern time today. Today we also, like I said, we had the NBA 30-year mortgage rate. Nothing else really drops today, to be honest. Payroll benchmarks, maybe, but the Fed minutes report's the big one today. It drops at 2 p.m. Tomorrow is a pretty busy day. Tomorrow we got jobless claims, manufacturing and services PMI, and then home sales data. Friday's the biggest day, though. Friday we got Powell speaking. Big Papa Powell. Dip and crash tomorrow. No. And again, you really want to get outside. Like, some people are really sensationalist, I guess. Like, I'll say it once, I'll say it again. The market doesn't crash every day. It's not going to crash every day. If you find yourself all the time predicting some type of market crash, again, you might be getting pulled in like an emotional direction. Most of the time the market's not going to crash. The market only really crashes. It depends on what you define as a crash. We don't get significant market crashes aside from once every 10 plus years. If we had a couple big corrections over the last few years already. So in terms of the likelihood that we're just going to dump and crash, it's pretty low, right? It's pretty low. And if you find yourself predicting it every day, again, you're probably getting strung along by just whomever. And I'm not even against you. Maybe we do crash. I don't know. I see a lot of people predicting a crash every day. And, you got to be more objective than that, I think, guys. Market's actually pretty green over the last few days. We had choppiness yesterday, as I predicted we would. And then today is the actual Fed minutes report. So that's an even larger report today. So I don't know anything about them, Exile. I want the market to crash. I need to buy some stocks. Yeah, I think people are kind of mad because they didn't get involved with this, right? This dip is one of the best buying opportunities in the game in the last few months. And a lot of people missed out on it because they were doom and gloom preaching, Oh, the market's going to crash. It's the end of the world. We're going to go into, And they missed out on buying it. A lot of stuff rebounded. And now, we're all the way back up where we were, basically. And they're still sitting there twiddling their thumbs. So it depends on what you call a crash, right? Really, my definition of a crash is dropping over 25% short term, in a very small period of time. That's my definition of a crash. 25% plus drop in a very short period of time. And so even this big dump, right? Even this big drop from the yen carry disaster, right here, you know, on the 11th of July. Or even this big dump right here on the beginning of August. None of this, even if we look at this entire percentage move, right? Even if we look at this entire percentage move, it was a big move, but I don't know if it was short-term enough. I would just consider that like a correction. So we were from 140 down to, yeah, I mean, that's a big percentage drop percentage-wise for Nvidia. So if we're looking at specifically Nvidia dropped about over 28%. It went down to what, $90 a share? So Nvidia percentage-wise, you could say crashed, dropped down to 35%, dropped from, you know, 140 down to 90, which is about 36% drop. But I think we got to look at the actual market here. You know, so the market dropped from 565s down to 510. So percentage-wise, the stock market over a long period of time dropped about 9.5%, right? So nowhere near like what would be conventionally called a crash, right? Nowhere near that. And essentially, we bounced all the way back up. You know, even this is the yen carry thing. The other thing's just downtrending, right? And this is even less. This is like, this is from 555 down to 510, which is about an 8% drop. So again, big correction, sure. Not a crash, you know. Yeah, that's normal for Nvidia for sure. Yeah, everything definitely didn't go down and back up over 30%. Nvidia certainly did. But Nvidia is incredibly volatile regardless. Nvidia is moving in a big volatile way no matter what, right? So that's not... We can't look at Nvidia. It's kind of like Tesla. Tesla, incredibly volatile stock, like highly volatile. If you're looking at Tesla for a 25% drop short term, you're going to find it, but it doesn't mean that's a market crash. It just means Tesla's volatile, which is the same thing with Nvidia. It just means Nvidia is volatile. Yeah, I mean, we can look at the yen. What is it? I had it the other day. I think it's I had it the other day. I think it's DP. No. DP. No. What's the Japanese? Oh, it's 6J/6J. Alright, so here's the yen. You know, and usually, like, okay, so like in the yen carry trade as an example, the yen pumped up, right? And so upward pressure is what scared people, not downward pressure. You know, so like the yen, if you want to, somebody's talking about a yen crash or whatever, I don't see that here either. I see it up a little bit from, you know, last week, but it doesn't look like it's like flying up, breaking highs. It looks pretty neutral overall for me. So I don't see any yen, like, I don't see any like nuance of the yen crashing or anything like that. Love you. Yeah, so I don't see any yen crash worries for me, but you know, or yen pump up worries. Yeah, we got snow earnings today. That'll be interesting. All right, I need a haircut. I see it right now on stream. I just need a haircut. It's called lo-fi, Lofi. Yeah, we can look at the Dixie. You know, a lot of people talk about the Dixie. I think a lot of people try to justify a crash in their mind, but if you're like, again, that you have the wrong perspective. If you want to crash, if you are pushing for a crash just so you could be right, you know, your priorities are messed up, I think. Yeah, the dollar index has fallen, but the dollar index falling is actually good for inflation, right? This is kind of what we want. You know, if you zoom out on the dollar, right, like you have this very specific dynamic, and I say this before, where people will pull you in all these different directions. They'll tell you the market's always about to crash, and I've said this 1,000 times. I'm going to say it again. You know, when we had this dip, let's zoom in a little bit. Let me put a daily chart up, maybe, or a little bit short term. So yeah, here we go. We'll just put this up. Right. So post 2020, we'll call it right here. Hey. All right. I love you. Okay. All right, just arm it, will you? Arm it. All right, love you. All right. So yeah, anyways. So after 2020, when this happened, everybody said, oh no, it's the end of the world. The Dixie is falling. It's crashing down. It's the end of the world. When the Dixie started to spike, this was at a period that we had high inflation, right? So when the dollar index started to spike, what did people say? They say, oh no, it's the end of the world. The dollar is spiking, inflation is rising, it's the end of the world. And then the dollar starts to pull back, and they pivot back to the other side. They say, oh no, the dollar is crashing, it's the end of the world. And so people push that. A lot of the time, people are getting manipulated by big influencers in the stock market. They'll tell you the market's going to crash. Literally every freaking week, they'll tell you the market's going to crash. If you look at their videos, every week the market's going to crash. And you would think they would learn. Like Einstein's definition of insanity is continuously trying the same thing, expecting a different result, right? But these people, they keep saying the market's going to crash every other week, and they've been doing this for years because it brings out people fear that, so they click on the video, you know, and then the market doesn't crash, and then they come up with some other thesis on why they think the market is going to crash a couple weeks later, and they'll title the video, market's going to crash tomorrow, watch this, market crash, you know. And you know, they just kind of rinse and repeat that, kind of pull you guys in and sell you a story. And then when it doesn't happen, they blame it on all this other stuff. The reality of it is the market hasn't crashed at all in the last 5 years. Maybe we're leading towards one, but we certainly haven't crashed every other week for 5 years straight. And it's important for you to recognize when people are doing that to you, and you shouldn't like to be manipulated. The Dixie's really sideways over a longer period of time. Yeah, so the NASDAQ, there's the Q. Q's pulling back a little bit. You can kind of see the NASDAQ rise or fall, you know. NASDAQ pulling back to the 200 EMA VWAP level. Yeah, you can look for a dip, and honestly, that's probably the time to dollar cost average into stuff. Maybe not dollar cost average, time to average into stuff. Tesla all the way up to 220s. Looks good. And this is on the heels of their Cybertruck event coming out. Yeah, today we got the FOMC minutes report, which should be fun too. All right, I wanted to have a better, like, there we go, that's fine. What stock are you watching right now? Again, target up big. Here's the Q. We'll put up the Nvidia chart. Maybe Nvidia is leading the market like it always is, trying to go green right at the previous closing price. Not the Cybertruck event, it's the Robotaxi event. Guys, we are here today. Good morning. Ouch. Sorry. No, well, yeah. They say it's Einstein's definition of insanity. I'm not sure who really wrote it. I'm just going by the sources. Yeah, so when I look this up, it's is often attributed to Albert Einstein, but there's no evidence that he ever said it. In fact, he was associated with the phrase until 1980s, decades after his death. Some say the original quote is actually by mystery novelist Rita Mae Brown, and other versions include doing the same thing twice, expecting the same result. Some say if you want different results, you need to do things differently. For example, you can try to understand the systems and processes involved and then work to constantly improve. This doesn't necessarily mean that you'll see immediate results. Yeah, I mean, I agree, honestly, to that extent, right? Like, I agree that insanity, trying the same thing, expecting a different result, does not always mean you're insane, you know? But it's a good lesson on, like, traders not getting taken advantage of. But I agree. I think there's like, as in a lot of things, generally it's true, right? But there are specific cases where it's not true. And like, you know, when you're building businesses, you know, an example of this, and this is something I've talked about before. A while ago I talked about this, but so I'll go ahead and say it again. But sometimes the smartest people are not the ones that succeed in business, right? Like, you know, if you find people that are really genius level smart, they're really super smart, a lot of the time they struggle socially, like they have trouble making friends, like they're not the most social, outgoing, extroverted person that you want, like marketing your business or like doing stuff like that. And so a lot of the time the smartest people are the least successful, believe it or not, right? And the people that are the most successful are smart, but they're also extroverted and social. So if you can mesh like intelligence with being really social and like make friends easily, you know, so forth and so on, make people like you, and you have intelligence on top of it, those are the people that generally do the best over people that might be much smarter than they are, right? But if they can't combine it all and make it work, you know, again, the funniest example, even though it might not be the best like source, it might not be the best credibility to this, but like it's still a fun example. Rob Dyrdek one time had an episode on Fantasy Factory where they all took intelligence tests, they all took IQ tests, right? And the point was to see how smart they all were, to see which ones were smart, right? And so Rob had a cousin called Big Cat, really socially awkward dude, really kind of nervous, like awkward dude, didn't put himself out there, not extroverted at all, much more introverted than Rob or even Drama, which was his other cousin. Drama was kind of in the middle, but he was still a little nervous, like you could tell he's a little awkward, little introverted. Anyways, the person with the highest intelligence was his cousin, the awkward, kind of quiet cousin. You know, his name was Big Cat, I think they called him. He had the highest. I think it was like 130 or something, 125, 130. Drama had the second highest. I think it was like 115. And then Rob had average intelligence. Rob had like 105 or something. So basically like average intelligence. But when you look at it, Rob is the most successful person out of the entire group. But Rob Dyrdek is a billionaire now, right? He's literally a billionaire. And it's hard to tell whether it's scripted or not. But they say that people don't have to necessarily be smart to succeed in business. You have to be able to repeat things. And this is my point, is that you have to be able to repeat things over and over again to be successful in business. Like in business, consistency pays more than a lot of other things, including intelligence sometimes, right? So if you can just be consistent with what you offer, keep putting your reps in, doing it over and over and over again, like those are the people that can really scale big businesses and grow big businesses because of that repetition over somebody that might be like genius thinkers, problem solvers, but you know, it's hard for them to put the social aspect together where they can mesh well socially with people, make people like them and stuff like that. So it's an interesting way to look at it, but I guess don't underestimate social skills and how important they can be. Coming from somebody that's really kind of introverted myself, right? Like I'm really kind of introverted. It might not seem that way. I've gotten better, much better. I don't know if I'm introverted now. When I was young and a teenager and growing up, I was certainly introverted. Now I'm much better, actually. But top 3. Hey, thank you. Appreciate it, brother. Yeah, we try. Yeah. Well, you got to evolve your business too. I predict a big crash recession in the world. Well, you're not the only one. We got people showing up every other day saying that. You know, they've been doing that for 5, 6, 7 years now. You know, none of it's happened, really. You'd think they would even accidentally get it right at this point. Yeah, Rob Dyrdek's a billionaire. I think he's a billionaire. He's either a billionaire or 100 millionaire. The reason he's a billionaire is because MTV is basically a die. This is actually a really interesting story too. And again, we're going to cover stocks. Target up big on earnings. BDPS missed revenue, but still gapping up a monstrous amount here. Q is still pretty sideways, just broke under the 200 EMA volume weighted average price level. It's now actually below that. Nvidia now under the previous closing price, under the previous close. Yeah, we'll see what happens. Most stuff is going to be trending sideways today. I think I might be wrong. I just straight up guess because we have the FOMC minutes report coming out. But yeah, so Rob Dyrdek. So basically, MTV is a dying TV channel. Like TV channels in general are kind of on their way out. Like TV networks in general, like MTV, are on their way out. People just don't watch TV like that anymore. Most people, especially young people, which is MTV's target audience, they consume media through YouTube and social media now, and the internet world now. They don't really watch specific networks on TV, not like they used to. And so those TV channels have lost, over the last decade, massive amounts of viewership. What Rob Dyrdek did that was really smart is Rob Dyrdek, the only shows that were successful on MTV over the past few decades were Rob Dyrdek shows. He had Rob Dyrdek's Fantasy Factory, and then he had the most recent one, which is Ridiculousness, right? And so what happened is that MTV found themselves where Rob Dyrdek's shows were the only successful shows. They were the only successful shows. None of the other shows really did well, except for maybe like The Challenge and some other ones. But, you know, MTV had all this space to fill. It had all this space to fill. It had to put something out, and nothing else was really getting views. And so that gave Rob Dyrdek like a ton of leverage with MTV. And so what Rob Dyrdek did was he started making MTV pay for the licensing of Ridiculousness. He started getting these huge contracts around Ridiculousness, the show, which is a really cheap, easy show to make, right? Like you just react to internet videos. But he had so much leverage with MTV that he basically dominated their licensing for a decade plus with his specific own unique proprietary content, you know. And so over time, he got paid big money to do that. He got paid big money. And again, MTV was desperate. They needed something, you know, they needed something to show up. And yeah, that brought Rob Dyrdek. Let me see what it is. Yeah, Rob Dyrdek, I thought it was over 100 million. Yeah, but you see a lot of other things. I don't know if it's the best. I see one that's saying 100 million, but then you see other stuff that says how Rob Dyrdek made $1 billion, right? So either way, he's either worth hundreds of millions or $1 billion. But again, he did that through MTV, right? Through leveraging MTV licensing with Ridiculousness. Nvidia just went green again on the day. It just popped up. It's at 127s. Yeah, it's at 2 p.m. Eastern Standard Time today. Yeah, I'm not really a big penny stock day trader. Grass. Thoughts on IONQ? Yeah, I'm just not really. Yeah, right. It's basically a reaction channel. It's kind of like Tosh.0, and really it copied off of Tosh.0. Tosh.0 was really the OG one. And, yeah, Rob Dyrdek just kind of copied off of it. And it was cheap. But again, think of think of how MTV's changed, right? MTV has no popular shows anymore. Like networks on TV are dying. Like they're just not around. Social medias like YouTube and other forms like this are taking over, and they have already. And so MTV, desperate to survive, had to pay Rob big money to keep the only sustainable show on their network, right? And so once Rob's initial contracts expired, that's when he had that big money leverage. And so, yeah. Yeah, Nvidia bouncing here. Look at it back up. Very flat day, though. We're kind of sideways. Yeah, Tosh.0 was great. I love Tosh.0. That's where we saw Chocolate Rain. We saw all the good shows. But again, Tosh.0 was the original, right? A lot of shows copied off of it. It's just reacting to funny internet videos, you know. But all right, guys, we almost got 500 people here already. The Fed minutes reports today. Big report. We don't really have anything else early, but we're going to trade live like we always do. Let's see if we get anything good. Again, we got the Jackson Hole Symposium at the end of this week. Yo, top three. How'd you know we were going to get a pullback yesterday? Extension. You know, it's not going to work every time. I'm going to be wrong about it, but, you know, we went up so much, it's likely that we're going to dip a little bit. We might continue back up. It just depends on what happens in the next 3 days, economics-wise. Alright, let me do a poll here. I don't think I've done a poll yet. We'll do the poll. Does the market close red or green today? Yeah, I mean, we're going to get a normal pullback sometimes after just big upward movement. It's not super, like, hard to predict. Yeah. Yeah. That was my favorite show growing up is Home Videos. What was it? It was like, was it Family Home Videos? It was America's Funniest Home Videos. That's what it was. That was like my favorite show growing up. All right, what's up, Daphne? Yeah, 3 green days. Usually after so much, we're going to get pullbacks. And honestly, that's one of the easiest strategies to profit, and especially like short-term day trading, swing trading, right? Like, so here's a good example. If the market goes like this, like this, say it's a daily chart, and the market goes green day, green day, green day, right? What's the next outcome here? What's a high edge trade there? If we have 3-4 green days in a row, at a certain point, it's pretty likely that we're going to start coming back down a little bit, right? And so if you day trade that, you can short it. If you swing trade it, you can short it, or you can buy put options short term and just take advantage of really obvious necessary pullbacks. Even if we're bullish and we're moving up and ripping up huge amounts, generally speaking, after consecutive green days in a row, we're going to pull back a little bit. Now, it doesn't always have to happen. Like, we've seen days where we've had so many green days in a row, and so it depends on market conditions. It's not always going to be there, but just in terms of general extension, it's something that you kind of add to your conditions. You know, you shouldn't base your trade purely around that, but if you have other bearish signs, signals like low of the day breaks, momentum, engulfing candles, like breaks under VWAP and 200 EMA and stuff like that, you combine it all together and get a good edge. Hey, what's up, David? You definitely always call things pretty accurately. It's not sarcasm. Top 3 most sarcastic traders in the world right now. Yeah, Bam is sad to see, bro. It really is. Bam Margera, really sad to see. You know, alcohol does this thing to your brain, man, where people who drink too regularly, right? The reason alcohol is so nasty is like people who drink too regularly genuinely start to slow down. They slow down, like they lose like speed in their thinking. You know, they can't think as fast. They can't think as logical. You know, I've known a lot of people that have wanted to be friends that I found out were just like massive alcoholics, right? And you could kind of see their decision-making ability. It just wasn't good, right? It just wasn't good. Even when they were sober, right? Even when they weren't drinking, like drinking so much causes, what's it called? It causes them to slow down. I can't think of the word right now, but it causes them to slow down, unfortunately. And it's hard to tell. It's slight at first, and then it gets worse and worse. I've known a lot of people that, they just drink too much and they just kind of slow down. You can kind of see it reflected in Bam Margera. Bam Margera, you can see it how he talks right now, that he's slowing down. And so he's genuinely got to give up drinking. If he's smart, he can still monetize his name. He's still a very famous person for the most part. But if he waits too long, it's not going to matter, and so he's got to slow down and stop drinking and try to get his mind back, Yeah, brain fog, whatever, Yeah, for sure. 100%. Slows cognition, mental acuity. 100%. It's called ARBD. It's called ARBD, which is alcohol-related brain damage or alcohol-related brain injury. ARBI. Again, I've known a lot of people that were like this. You can tell they just start to forget things. Their memory is one of the first to go. So they start to forget things. They start to make irrational decisions, and it just doesn't end up working out for them. I feel for them. Looking at our polls, we got 60% saying red, 45% saying we're green, or 55% saying we're red today, 45% saying we're green. He stopped drinking. No, I'm skeptical, Simon. I can kind of see it in his behavior, right? Like you can kind of see it in his behavior. Now maybe he did, but it would have to be very recently that he stopped, right? They got a lot of publicists and stuff like that. But if he did, it would have had to been really recently, because you can kind of see he's still slowed down a lot, and maybe he's just burnt out. Who knows? I can't judge him too much, because if I was that wealthy and famous at that young age, I'd probably be kind of wilding out too. So I can't really judge him, but. Yeah, it's sad, Tiny. Sorry to hear. Yeah, a really sad story. Even a guy I knew on stream, out of respect, I'm not going to say his name, but he was a guy that used to help out with the channel, and this was years ago. He used to help out with the channel, and then in the Discord, he would kind of all of a sudden just lash out. Like, he would make fun of me for trading too small. He would make fun of me for not going big enough, for not making enough money, and like he would just kind of lash out when he was drinking, right? And then he would get banned, and then he would send me another message apologizing, being like, hey, I'm sorry, I was drinking, I'm sorry, I didn't mean to say it. And then I'd unban him and say, it's all good, like, just chill out. And then everything would be fine for a little while, and then he would do it again, right? Then it would happen again. Eventually got to the point where, like I said, definition of insanity, continuously trying the same thing, expecting a different result. Eventually, I was just permanent with it. I was just like, nope, like, it's not worth it. Like, you're publicly trashing me over having risk management. Like, I'm trading too small. Like, I'm supposed to trade small. I'm not claiming to be an expert or anything. Anyways, and again, that happened. Anyways, later down the line, I found out that he passed from it, and so, he was a good dude, man. He was a good dude. I feel for him. I still think about it sometimes. I feel bad for him, man. So. What's up, Casey? They want rate cuts. It has to go red before that can happen. I don't know. The market and the economy are like different animals in that way, right? So rest in peace. Good dude. He was really a good dude. He just, anyways, target up to 164 is Nvidia. Q. Where's gold at right now? I know gold was breaking lifetime highs yesterday. Yeah, so gold still hit lifetime highs. Is this so yesterday got up to 2570s. Put that up here. That's the new lifetime high level, 2570s. Down to 2550 still, but holding its gains for the most part. Yeah, like it was tough, man. He would like I said, again, I've always been the same. Like I've always told people I'm not an expert. I don't sell a course. Like I don't even claim to be a good trader. I trade live so people can see what it's like. I try to tell people the truth. You know what I mean? Like I trade small sometimes because trading small is necessary. And again, I'm just not a gambler. Like I don't need to risk money and feel butterflies in my stomach to trade. I just don't need to do that. But you know, he would take really big gambling positions, and then I think he would make money, and then lose his whole account, and then get really depressed about it and drink, and then lash out at me or whatever. Like it just got really toxic, unfortunately. And he was a good dude, right? He was a good dude. He had a family, I think, too. So sad story for sure. Yeah, the only thing I drink is coffee. I'm not a drinker at all. Like I don't drink at all. I drink at like a wedding or maybe at the beach, you know. But yeah. Anyways, NASDAQ did just break below the VWAP and the 200 EMA. This is a big level. Previous closing price is a major spot here. So this is a big spot. Let's see if it holds over and under this level. These two levels right here are usually pretty big milestone levels. So if we break underneath it and hold, yeah, so if we break under that and hold, that's great. We get the previous closing price right here. The countdown to what? So the FOMC minutes report is at 2 p.m. That's going to be a separate stream. So we don't really have to count down to anything, you know. Somebody that we were all friends, right? So this was all like friendly stuff. So we all kind of had, like a group of us all knew him, you know. And they reached out and sent me his obituary and like, you know. The FOMC minutes is in like 6 hours or whatever it is. So we got time. I'm not going to put a timer up for that today. Oh, it was not 10 mil. It was 1 million. So the news about, so we hear some people talking about the revision data. And so this is what it was. So today, again, I'm going to go over this. We went over it once, but it's pretty good to refresh everybody. So the Bureau of Labor Statistics, the BLS, released a significant job market revision that's going to have major implications for the economy. It suggests a large downward revision to job growth figures, and this is the dates from April of last year to March of this year. Estimates indicate a potential reduction of up to 1 million jobs from the previously reported data. It's based on quarterly Census of Employment and Wages, which is QCEW data, which revealed that job growth may have been overestimated during that period. The revision could show that monthly payroll growth was overstated by 50 to 85K jobs on average per report, right, is what this is, right? So that's why it's about 1 million. It's around 1 million. This update is the largest downward revision to payroll since 2010 and raises concerns about the robustness of the labor market. It is a little bit lagging, though, so this is from like months and months ago. The implications are significant for the Fed as it prepares for its upcoming meeting. And as well as, again, we got Jackson Hole Symposium coming out on Friday with Powell. That should be a big economic conference. Hopefully we'll see if we're going to cut rates or what the plan is there and what that looks like. Yeah, so the minutes report comes out at 2 p.m. today. As always, pretty big report, relevant report. Uh, 2 p.m. Eastern, 1 p.m. Central. All right, SPY at 559. All right, guys, let me check this. Yeah, check it out up on some other stuff. Looking at the votes here, we got a couple hundred votes. Still 55-45, pretty split down the middle in terms of red or green in markets, what people think is going to happen with markets. Give me some TA on Bitcoin. I don't really, have any TA on Bitcoin. Bitcoin almost at 60K. Bitcoin's been pretty flat for like a year straight now almost. If you look at a daily chart on Bitcoin, it's been pretty flat. It's down a little bit, but yeah, Bitcoin's been pretty flat since March of this year. Maybe not a year, so it's been flat for like 6 months now. I have no idea what it's going to do. I hope it goes up, but, I think over time it probably will go up. But short term, anything could happen. Yeah, what's up, Foo? Yeah, Target earnings. Target flying up, guys. Gold still, pulling back a little bit today after breaking lifetime highs yesterday. But Target up huge. Big movement up to almost 165. Any news today? So we got the Fed minutes report much later on in the morning, or much later on this afternoon. Dude, I get this like groin and hip pain from, I don't know if it's from jiu-jitsu, which is more probable, but it might be from just sitting too long, man. Hey, I'll be right back, guys. I gotta go check on my son. He's not responding to me. I'll be right back. All right, my son's over there. My guess is he's playing video games. He's not supposed to be playing right now, but my wife had to bring my daughter somewhere, and so I'm sure my son's lurking in the corners playing video games, trying to hide it. Yeah, honestly, Sean, that's what I was just looking up. The PSOAS, whatever that is. Like, I trained yesterday, and when I went to Florida and I stopped training for a couple weeks, it got better, but now it's back. All right. Yeah, tomorrow we have jobless claims unemployment filings. So that'll be big, but again, Jackson Hole is a much larger event. So far, we've had choppy. SPY hit 560s. Lifetime highs on the SPY is 565. So the SPY is pretty close to lifetime highs, really. It's at 560. We're like $5 away from lifetime highs on the SPY, which is kind of crazy. SPY is right back to close to highs here. So if the SPY has a good green day, if the SPY has a positive reaction to this economic symposium on Friday with Jerome Powell, or data tomorrow, or the Fed minutes today, we could break lifetime highs, which is kind of crazy. We're all the way back up. Yeah. All right, we're gonna be day trading today some also here. Yeah, the Craig Jones Invitational, speaking of jiu-jitsu, was fun, man. That, was it? That, Cade Rotolo versus, was it Tackett? Whatever his name was a great match. I thought Cade lost, though. I think he was kind of spamming submissions at the end, which is great, but I don't think any of them were really close, and so, I don't know. Is it their data today at 10? I don't think there's any big data. Nothing major here. We got yeah, we got payrolls, but it's not really big. It's not going to influence markets, I think. Not in any major way. Check my previous comment. What's up, Sam? What comment? I'm looking back. I don't see anything. You still watching Industry? I haven't seen it. I've seen a couple episodes, but I haven't finished it. I was asking people yesterday about Industry. I haven't seen it. So the only thing I've seen, like the first episode. I don't even think I watched the whole thing. You know, as a parent, husband, and like running businesses and stuff, like I really don't have a lot of time to watch shows. And so usually what that means is that when I watch a show, it's family time that I'm either visiting with my wife or my kids. And so either my daughter's got to watch it with me or my wife's got to watch it with me. And they're just not super interested in investment banking. But it looks good. I remember the first episode was good. Hey, thanks, Andy. Appreciate it, man. FOMC minutes is at 2 p.m. Eastern time today. All right, yeah, so we're here. My dogs are barking. Not in the 8:30 news. Yeah, we don't have any 8:30 stuff. Wait, so is I thought they already revised the unemployment numbers. So I thought they already released it. All right, is this the payroll benchmark? Okay, you're correct. It does come out at 10 a.m. The payroll revisions. Okay, so that's the payroll benchmark. Okay, got you. So they are going to be revising payroll data at 10 o'clock today. So interesting. So yeah, so we're going to cover that completely for sure. Yeah, interesting, Allison. Appreciate it. Yeah, I'm going to check it out, and we'll cover it for sure. Tesla spike it up a little bit too. All right, guys. All right, so yeah, we got labor and payroll revision data. So that's actually a pretty big report. I didn't realize. Yeah, so I'm trying to cover. We got the FOMC minutes report too. All right. Yeah, so the Fed minutes comes out at 2 p.m. today. Make sure this is my right one. Yeah, so where's oil at? I know we've had a lot of like macroeconomic uncertainty, or geopolitical uncertainty, I should say. Here's gold. Oil is CL. So oil's down, but not really volatile today. It had a big pullback on the 19th a few days ago. Nvidia is still moving up though. Q is still bouncing up, so that's kind of what we see now is the NASDAQ moving up. The Q's bouncing up a little bit. The minutes report is at 2 p.m. today. Yeah, I don't know, CWC. I still think you have the wrong mindset. He says, need to fix the numbers. If they gave us real info, you would see we're in a recession. You know, I think this is kind of the way you have to look at it, though. Right? So, like, okay, think about it like this. All right, so we have, say this is 2020. All right, say this is 2020 on a timeline. Following 2020, they reduced interest rates. They brought interest rates down a lot. They tried to save the economy from a recession, depression, from too little people working during the pandemic and too little people spending and losing GDP and all this stuff, right? And so they lowered interest rates to consumers. And what this caused is this caused inflation to spike. You know, so this caused inflation to have these big, massive spikes, right? So the labor market was doing well, payrolls were spiking, inflation got much worse in this period of time because the economy had to get stimulated from money printing, from stimulus checks, from all these different things, right? And so the consequence of it was inflation spiked. You know, the economy thrived because they stimulated it in that way. You know, so the economy thrived. The consequence was inflation. And so then the Fed takes the stance of like, hey, we got to calm this economy down a little bit. Inflation spiking up. Inflation got up to over 10%, I think, at some points. PCE data got up to 6-7% inflation for core PCE. And so inflation got really, really bad. And the Fed has to play the other side of it now where they have to kind of push down the economy. They have to reduce spending. They have to make the economy weaker in that regard. They do this through raising the federal funds rate, raising interest rates to consumers. They do it through quantitative tightening. Basically, they stop expanding their balance sheet. They start letting their current holdings run off and mature, and they reduce liquidity in those markets, and this causes banks to keep interest rates high to consumers. And we go over this every day, but the point of all this is to push the economy down, to like push the economy down a little bit. And so, you know, the entire purpose of that, what's called a hawkish Fed, is to push the economy down some, to reduce the economy down a little bit. Why? Because inflation has spiked, and the more people that spend, the more people that, you know, the more aggressive economic growth we have, the more inflation spikes, and that's not sustainable. You know, people are really unhappy now because of high prices, right? And so when the Fed's being hawkish, the economy is going to lose steam, right? The whole point of it is to push the labor market down. That's intentional. It's supposed to happen during these hawkish Fed situations. They're trying to push the labor market down, push the jobs market down, push the economy down a little bit. Why? Because that's how you control inflation, by pushing all of that economic stuff down, because you got to control inflation, because if not, prices will continue to rise, you know, unsustainably, and it's just not going to work. And so, you know, now we're into this period where the Fed has been intentionally doing that for years, trying to combat inflation, and we have seen inflation go down a little bit. But like when you look at historical examples of recessions, number one, there's a very specific definition that we're nowhere close to right now, even if the numbers that they put out are wrong, right? We're still not close to the technical definition of a recession, right? Like, just because things are bad doesn't mean we're in a recession. Things can be bad for the opposite reasons of a recession, which is too much spending, which is true in that regard over the last few years, right? So I guess the point is, even if these numbers are faked, we're not in a recession. Like, GDP's not losing, unemployment's not super high, and this data is from 6 months ago. So this data is not from today, it's from 6 months ago. And so, like, I get things are bad and you might distrust our current government and like all that stuff, but it doesn't mean we're in a recession. It just doesn't. We don't have losing GDP. Like, you can look around. When we're in a recession, nobody will have jobs. Everybody's struggling to find jobs, and that's just not the case right now. People can find jobs pretty easily at this point in time. Like, it's just not and again, I know we might have somebody that will say, nah, not in my area. And maybe your area is different. Just generally, people are having an okay time finding work. They're trying to keep up with the high prices, which is the opposite of a recession. And again, I'm not saying these numbers aren't faked or whatever. I don't freaking know. All I have is to go by these numbers. But yeah. Nvidia up to, it's all good. Like, it's all good either way. Need MicroStrategy to bounce. Yeah, for sure, right? People can find jobs, but the pay's not high enough for them to live off of. 100%, right? But that is my point, is that is not recession signs. That is signs of massive inflation problems. Like, inflation is the real enemy here. It's not recession. It's inflation is the enemy, right? And how do you combat inflation? You push the economy down more. And so that's why, like, a lot of people have it backwards. And again, you can also have both. It's called stagflation, where we have high unemployment and high inflation simultaneously, right? I don't know if that's what we're in either, but it's definitely nuanced, and maybe I'm wrong. I certainly could be wrong, and maybe we are. I just don't see the conventional signs of a recession. I just don't. And I think a lot of people are programmed. They don't trust the government. They don't trust the current administration, so they just kind of blanket statement, hey, we're in a recession, and I just don't think that's true. And again, I'm very politically neutral. I don't like, I don't like the whole realm of politics. I gotta stay away from it. Nvidia's spiking up to almost 128s right now, though. So Nvidia bouncing up could drag everything back up with it. Gold. Standard of living. People think they need things they don't. Yeah, I think people live above their means. Everybody wants to look wealthy. They finance brand new cars that they shouldn't be. Lock themselves into long-term debt. They buy houses that they shouldn't be locking themselves into long-term debt. Then when they can't afford things, they say, oh, I can't afford things. It's like, yeah, well, why are you buying a house in the first place? Like, why are you buying a freaking $500K house on a $50,000 a year salary? It just doesn't make sense. Everybody wants to look more successful than they are. There's a very famous quote, don't try to look rich, be rich, right? Wealthy people are some of the smartest, like, with their money ever. Like, they generally speaking are very careful in what they spend money on. A lot of them wear t-shirts, shorts, flip-flops, drive old cars. Like, it's not the same, Like, even Rolexes, right? Like, I'm a big watch guy. I like Rolexes. I like kind of, buying them and selling them or whatever. But even Rolexes, right? Like, Rolexes, most people that buy Rolexes are not like the super, super wealthy people. Super, super wealthy people generally don't care that much about watches, up to a point. The people that are buying Rolexes are like middle class people, a lot of the time that want to look wealthy. Same thing with like Louis Vuitton to a point, right? The wealthy people certainly buy those things as well, but a lot of the people that do are not wealthy, All right, guys. So we're looking at a couple things. Yeah, so I don't think we had any 8:30 data today. I'm checking back just to be sure, but I'm pretty sure we don't. Yeah, so CWC said, have you ever looked at the U6W or unemployment rate? U6 unemployment rate is this, right? So one of the things about the U6 rate is that it averages higher than the regular unemployment rate that we all know of. And so, like, here's an example of the U6 unemployment rate, right? Currently, the U6 unemployment rate is at about 8.2%. 8.2%. But if you look at this data, so we're right around here for U6, right? It's not crazy high. Like an example of this is in the 2008 recession, the U6 unemployment rate was almost 20, right? So the U6 unemployment rate does not signal a recession either, right? Again, the last time we were there, we were way up here at the peak of the economic disasters, 2008. So, you know, but again, you can kind of see it basically is the same thing. It just trends higher. My wife got a Louis Vuitton 1500 purse back in 2016 when I made 20 an hour. I was super broke. Yeah. Fake bags? I'm not mad at you for buying fake stuff. I really am. I'm not one of those guys that are like, you can't buy fakes. You know, nah, dude. Buy whatever you want to buy. I don't care. You know, I'm not judging you either way. All right. Do you think the market is going to spike at the job report like last time? This job report's not, like, it's a revision of payroll numbers. So we'll see, but I don't know. Yeah, one of the things, Carol likes nice stuff like that, but she never, ever pressures me to buy it for her, right? Like, Carol's not a super materialistic in that regard. She's really not, right? She's really not. Like, she's not a wife that expects super luxurious purses or diamonds or jewelry or anything like that. And I can respect that about Carol, right? I offer to buy her stuff like that, like, all the time, and she usually says, no, I'd rather have this or I'd rather have that, and usually it has nothing to do with luxury stuff, which is great. I can respect Carol for that, you know. Yeah, no, for sure. The Arizona tea guy consistently keeps his prices at 99 cents. It's why they have such a cult following there. You know, Arizona tea, always cheap, always $1. Wealthy people have paid off homes. Most of the time, sure. But a lot of them also use leverage. It depends on their industry. If they're in real estate, they might have a ton of different mortgages, a ton of different homes, a ton of different business loans. It just depends. It's not a broad brush thing. Like, it's not a one style fits all thing. Sentiment is that jobless numbers will come in over 500K, renewing recession fears. Nvidia must save us bulls. Maybe. Sometimes the sentiment is not always the case, though. We'll see. We'll see how the market reacts. Again, 10 a.m.'s, you know, we got the payroll revision data coming out. All right, so yeah, the potential reduction of up to 1 million jobs drops today at 10 a.m. It's actually a really big day. So again, we'll see what that looks like. No, I didn't check Discord this morning. Sorry, Pawn. Let me pull it up. My bad, bro. Sometimes I forget to throw it up there. Let me scroll through. So Tesla, we're calling almost 10,000 Model X sport utility vehicles. Yeah. All right, guys. So, you guys ready? Yeah. Get that out of the way. Get that out of the way. Yeah, so today we got the FOMC minutes report coming out later. Let me get rid of this. There we go. All right, so we'll put a timer to 10 a.m. So we will put a timer up, right? So, but this timer is going to be for 10 a.m. So this is in an hour and 21 and a half minutes or so. So right at 10 a.m. So we'll put this timer up. And again, this is the big report today. It's the labor revision data. And then we also have the Fed minutes report at 2 p.m. today. Yes, the biggest down revision since 2010 is what it is. Is payroll revision a big deal? It's pretty big. Hey. All right. They're taking all the jobs. Yeah. So Wells Fargo is selling off billions of dollars in commercial mortgages. They're set to sell the majority of its commercial mortgages service business to global loan service provider Tremont. The company said yesterday it would make them the largest loan servicer in the U.S. industry, specifically meaning Tremont. We also have some other stuff to look at today. So a U.S. judge strike down the non-compete agreement ban, which I kind of agree with. I think you have to have non-competes, right? Like, if not, people are going to be stealing all kind of business ideas, business plans, all kind of clients, all that type of stuff. You have to protect people in that regard. So, again, a federal judge said yesterday in Texas barred a U.S. Federal Trade Commission rule from taking effect that would ban employers from requiring their workers to sign non-compete agreements. Honestly, let me backtrack here. I disagree with this, right? I absolutely disagree with this. You know, I think you have to give workers the freedom to choose their employer. I'm backtracking. I know I originally, like, in business, I think it depends, right? I think it's more nuanced than just basic yes or no, good, bad, should or shouldn't be. You know, so the ban, it would specifically target employers from requiring their workers to sign non-compete agreements, right? But I think it should be more nuanced than that. I think they should allow it, but only on certain conditions. Like, you should always allow somebody that works for a specific company to apply for other jobs elsewhere, right? I think that's completely normal. You got to let people leverage their positions and get more money. Because basically what happens is, like, if one company doesn't want to pay you, another company might want to pay you more, right? And they might be willing to pay you more, increase your salary. But if you have them sign a non-compete, basically stopping them from shopping around, a lot of workers are going to get screwed over. It's not the right move, I think. And so it's unfortunate that Texas I agree with this ban. I agree with the ban. I think they shouldn't allow people to do that. But I also think it's more nuanced than that. I think like it depends on what kind of business it is and all this stuff. Depends on trade secrets. Hey, bud. Love you, buddy. Have a good day, man. All right. Your hair's sticking up a little bit. Go get your mom to brush that. Yep. Yeah, I think it's actually good. Never mind. Your hair's fine. Yeah. Love you, bud. Have a good day at school, man. Yeah. Yeah. Tesla's spiking up, breaking highs. Hey, baby. You're on my stream. Yeah, there you go. Hey, buddy. Love you, man. Have a good day. I love you. Love you guys. Y'all be safe. Have a good day. Yeah, but I think we're in I think it's a situation though like this, Zach, where I think like the situation that I see pretty regularly is this. You know, I see people get hired for a job, right? Said employer keeps keeps people at these jobs for years and years, right? The person's patient, but the employer's just cheap, right? Like they don't want to pay them more, you know. And it's not like they don't have the money to pay them more. Like they have the money to pay them more. They just don't want to. They want to be cheap. Right, so, you know, what people generally do is they say, okay, well, if you don't want to pay me more, I'm going to start applying for the same job at other businesses, and, you know, the other businesses are going to be willing to pay me more, right? And so then they can basically say, hey, I got accepted at a position here. You can match this, or I'm leaving, and I'm going to get paid more elsewhere. And, like, you're not going to have me to do this, and you're going to have to hire somebody else, and you're probably going to have to pay them more anyway. So, like, might as well pay me more now. And just let's skip the middleman process, right? And that's okay. I think that's good. I think it's necessary. I think that's something. That's how it should be, you know, like that's how it should be. But if the employer has them sign a non-compete, then they're not able to do that. They're basically stuck getting paid worse money, and they can't do anything about it. And I think that's wrong. You know, I don't think that should be allowed. I'm okay with non-competes to a certain extent, but I'm not okay with, like, I think non-compete should be allowed for simultaneous employment. Like, I can't work for you and work for somebody else that's a competitor to you at the same time, right? Because then it gets iffy, you know. And I definitely agree with NDAs and non-disclosure agreements and like protecting trade secrets and stuff like that, because that's normal. Every business has got it, you know. But I'm okay with it under like the terms of like a base level of protection. But I agree people should be able to shop around in business and employment. Yeah, you can't give away, say, a non-compete. A non-compete means that, so like an example of this, right, is if somebody came to me, Tiny, and they were like, yo, John, from Beginner Trading, I want to buy Beginner Trading from you. And I would say, okay, pay me $3 million, right? And they say, okay, sure. You know, and they paid me $3 million, but one of the contract terms was like, hey, you can never create a competitive service to you. Like, basically, they would say, you can't ever create another form of this ever again, right? I probably wouldn't sign it if that was a more likely condition or clause would be like, it would be a non-compete for X amount of time. Like, for 2 years following the execution of this contract, you can't, you know, you can't compete with us in any way, basically. Like, I can't basically sell my business to whomever it is and immediately start another one called intermediate trading, and person who just bought the channel called beginner trading sitting there twiddling their thumbs. I'm over here creating immediate trading, intermediate trading, you know, and now they're bad. That's a more like likely non-compete example. You do a buyout or, you know, something like that, then non-competes are fine and they're necessary, right? But I'm talking about just for general employees that aren't getting bought out, that aren't getting checks, that are basically just kind of sitting there not getting paid what they should be, and want to go to other companies or whatever. Yeah, somebody said that I don't understand non-competes. A non-compete agreement is a legal contract or clause typically included in employment contracts or business sale agreements. As I said, it restricts an employee, contractor, or seller from engaging in activities that compete with their employer or buyer, either during, as I mentioned, or after their employment or business relationship ends. You know, it's exactly what I just said. Literally exactly what I just said. I don't know if you're talking to me about it, but I certainly understand non-competes. I've dealt with them in business before. Yeah. All caps means passion. Right, for sure. It depends, right? If it's employees, it's one thing, Tiny, right? And I don't think it, I think it should be allowed specifically in buyouts, right? If somebody's buying out something and they're getting a check and I'm saying, hey, I'll pay you X amount of money, you just can't compete with me for X amount of time. Perfectly reasonable, I think. But if it's out employees, like, hey, I want to hire you for my company, but I'm going to try to restrict you from ever working for a competing company again, that's just selfish, I think. Like, that's just selfish. I think it's unnecessary. Yeah, Derek, I don't think you understand non-competes, brother. You're yelling, you don't understand non-compete, you don't understand non-compete, you don't have employees. I don't think you understand it, brother. You know, like you're acting like, you're either acting like it's only specifically related to employees or it's not related to employees at all. But again, you can look this up. It happens on both fronts. It happens in buyouts, certainly happens in buyouts, right? And I've dealt with this in buyouts before. This is where I've specifically dealt with it in buyout. I've said, basically, it was for me. I said, hey, I'll pay you X amount of money. You will, you'll get X amount of money by X date. And for 2 years after this contract is executed, you're not allowed to compete with me in any way, right? Perfectly reasonable. But again, it was a buyout. It was a, you know, but businesses, again, also use them for just base employees, right? Just regular employees. And that's what I specifically disagree with. And again, you can kind of see it here. It restricts an employee, contractor, or seller from engaging, you know, in activities or whatever it is. So the timer in the top left is for the payroll revision data that drops at 10 a.m. Eastern Standard Time. You explained it perfectly. Definitely top 3 explanations in the world, Coin. That's the matter of a non-compete agreement. Right, a non-compete. That's what we're talking about. NCA, non-compete. You know, there's also NDAs, non-disclosures, right? Like, there's a lot of contracts here. But I think Derek is a great example of, like, people argue for things that they don't truly understand a lot of the time. And I know I probably do as well, to be honest. But this is something I do understand, right? But sometimes I think people just like to argue, you know? I think it makes sense in a high-level position, corporate. Yeah, but for sure. But again, so Noodle, it definitely makes sense at high-level positions. With the only part that doesn't make sense though is, like, you can sign an NDA and completely be not allowed to disclose confidential information about your previous companies, right? That's called an NDA, right? But I think the point you're probably making is that it's very easy, even if you have an NDA, to get hired at a new company and kind of let some secrets slip. And so in that regard, it might be more beneficial for the previous company overall to just have you sign a non-compete if it's super high level and you're getting paid high amount, like really high amounts of money. And I think that's actually okay. That's understandable. I just don't want I don't want the average worker to get screwed over by small businesses that just don't want to pay them, you know. Contractors are different. Like, contractors are kind of at, like, as you need services, right? Like, some businesses, like, just don't have the means to pay employees like that. They just don't, right? And so independent contractors are different completely. Independent contractors kind of taking work if they can get it, and like no matter what, they're not really employees or anything. But whenever you got somebody locked into like a work contract, I think that's where it can get kind of slippery. Anyways, Tesla up, Nvidia pulling back a little bit. We are pulling back. I think we're going to get choppiness leading into this report. We'll have about 30 minutes of actual opening activity that happens. But again, you can kind of see the previous closing price, the volume weighted average price, and the 200 EMA sitting within a range of Nvidia. And I think Nvidia is going to influence everything else here. I like your channel, bro. It's like a calm wake up to the market with a good old morning coffee. Hey, welcome, Casey. I appreciate it, brother. Thank you, man. Yeah, I think I disagree with that, Dr. Crypto, for sure. I don't think, like, taxing unrealized gains is never the move. It's not sensical at all. Like, taxing unrealized gains is absolutely ridiculous, and only people that don't understand trading are going to advocate for that. It just doesn't make any sense whatsoever. Like, taxing unrealized gains is crazy, It's just not sensical at all. It's not practical. Right, 100%, Derek. Derek says, I'm a general contractor. I don't want employees taking my customers. Right, but if your employees are willing to pay your customers more for the same job, right, there's nothing you can really do to stop them, right? Like, having your, especially if you're a contractor, having them sign non-competes with you, like, I get it, but in that regard, you got to just let those employees or let those contractors go, rather, right? Like, you're not going to be able to keep them there and force them to work for you. And so if somebody, this is the nature of labor in general, right? If somebody else can pay the person more, like, let them go do it. Like, let them go get paid more. Like, that's normal, it's not their responsibility to stay loyal for that, like, to you at all in that regard. Like, they're allowed to get paid more if they can get paid more, and your job is to pay them a competitive enough wage and treat them good enough to where they don't want to go to other places, right? And that's on you. Outside of that, there's nothing you can really do to stop them. And I think that's the right way to be, too. I think that's the fairest way to be. Let people get paid more if they can, I don't take it personally, Yeah, I don't think it could ever get passed. I don't think it's reasonable to pass the unrealized gains tax. That's just not, it's not practical. It doesn't make any sense. I might be up $1 billion in a position. It doesn't mean I should pay taxes. What if I pay taxes on that billion and then it turns and I end up losing another billion, right? Like, it's not practical. It doesn't make any sense. And it's not going to happen either. At least it shouldn't. Hey, what's up, Frost? In theory, yes, Noodles. He says, forgive me, I'm not an economist, but in theory, if you taxed unrealized gains, would you have to cut taxes for unrealized losses? Well, you would have to let people write them off in a more substantial way, I think. I think you would have to let people write off unrealized losses also. And I think it would just open the door to so much manipulation going on, right? Like, people would actually pay less taxes, I think, because they would maneuver it to where it showed these massive unrealized losses. And then they would say, well, I don't have to pay taxes because look at all these big losses, even though they're unrealized, right? Like, there's a lot of ways you can maneuver that to be sketchy. And I think it would open the door to just massive sketchiness in terms of unrealized gains and losses in markets. It's just a terrible idea, right? Anybody that actually understands knows it's just a horrible idea. Anyways, Tesla pulling back. It's at 222s. Look at Tesla. There's gold. Gold's still consolidating. Here's Tesla. Tesla up, but pulling back. Nvidia, again, above the previous close, the 200 EMA and the VWAP level. Right, it sucks to train someone how they take their talents to market, but that's capitalism, 100%, right? Then hire somebody that's already trained, you know? That's the move. And pay them if you pay people, I've genuinely found if you treat people right, you pay them well, you look out for them, again, then you're going to be okay, right? Like, that's what I find. I'm a real believer in, like, you get what you put out there. If you're good to people, you get goodness back. If you put out a bunch of negativity, harassment, weirdness, crap talk, like, you're going to just get that back, and it's not fun, Yeah, Derek, I would be careful. Nothing against you, Bob, but there's a lot of scammers that just try to get. Don't ever send Bob or anybody money, or give them any private information unless they sign like a W-9 or something like that. Get their information first. Sorry, bro. It's nothing against you, Bob. I just don't know you well enough to, I gotta protect the community a little bit, bro. Yeah, Target's up big on earnings. So Target up big, just broke pre-market highs too, up to 167s. Right, 100% pawn. There would be a lot of that stuff going on. Yeah, I'm a big believer in Costco. I like investing in what I know. I go to Costco on a Sunday. I hate it, personally. I freaking hate Costco on Sundays. It's chaos. It's like driving, but worse. It's like driving, but you gotta look at people. I hate it. I hate Costco. I hate Costco on a Sunday. Costco's cool, but you go there on a Sunday, it's miserable. But with that said, they're wildly successful, If you got a hard time walking around the store because there's so many people on the weekend, store's probably doing pretty well, and Costco is a great example of that. If you look at Costco on a yearly chart, flying up, especially this year. The only problem with it is that it's too extended short term. Like, this thing is up from $500 basically to $900. So this thing's up like 80%, which is 500 to 900 is about 80%. This thing's up 80% on the year, which is crazy, very high percentage increase. Yeah, my wife loves the grocery store. She absolutely loves it. I freaking hate grocery store shopping. I freaking hate it. I don't want to go. I hate going. Every time we go, my wife's like, hey, we're going to get one thing. We're just going to get one thing. I just need to run in there and grab this. We go in there. Before we know it, our freaking cart is full of nonsense. Spend $500 on nonsense. Takes up like 25% of the day just to go to the grocery store. I just don't like the grocery store. It's been a while since I've been to Sam's Club, though. I used to go to Sam's Club as a kid. Like, my dad used to bring me to Sam's Club. They handle their lines better. Yeah, well, they don't actually pack up anything. Like, you don't get any bags. Sometimes they'll give you a box if you got a lot of stuff, so it's just different. Anyways, Nvidia is still right above this previous closing price level. Right above it. We still got time, but Nvidia is still way above that previous close. We're at 127.50. Here's the VWAP. Here's the 200 EMA. This is usually a big milestone spot, so I'm just going to assume we might find support here and continue rising back up. We'll see. Hi, John. Can you explain IV and options like you're explaining it to a 5-year-old? Implied volatility is how much people think the stock moves on any particular day. If people think the stock has a bigger scale of movement on any particular day, it has a higher IV, which generally means if you're buying options, it's going to be more expensive. Why? Because you have a greater chance of profiting or losing big from it. And so they are going to make the conditions in that option trade more strict, right? Or they're going to make the conditions in the option trade more strict. Generally, it's going to be more expensive. You're going to have to pay for that volatility that you might get because you got a big chance of winning or losing in that regard, you know. So I know that's not to a 5-year-old, but that's the easiest way to explain IV. I'm not a big options trader though, you know. Are the markets overbought? What time frame? All right, guys. Also, check out TopStep. TopStep funded account program and futures. They give you a demo. They test your skill with a demo account first. If you pass the demo test, they fund you the regular amount. On TopStep, they are one of the most legit in the world. You know, they have some of the best rules once you're funded, best payout rules. You know, great way. You know, just to preface everything, they paid out over 40 million since 2020. There's 3 options here. There's the 50K, 100K, and 150K. This one is only $49 a month if you use my link. They're going to give you a 50K demo account. And if you can make 3K in profit on that without losing 2K first and following their rules, they fund you 50K, 90% split. If you lose, you're only out $49 for that month. It's not the end of the world. It's much cheaper. Almost all day traders lose money. And so if you put up 3, 4, 5 grand trying to day trade, you know, I know you think you're going to be some trader savant. You're still probably going to lose everything, right? Most day traders lose. And so if you're learning to day trade or if you don't have that much money, this is probably a good option because if you put the money up yourself, you're probably going to lose it, you know? And so if you lose this funded account program, you probably would have lost 10x that in a regular account, you know? So it makes sense to limit your risk, scale down your risk, but you're still risking something. So it's not like a regular paper account. It comes with real-time data also to a certain extent. And so, like, you know, paying for the real-time data yourself, it's going to cost like 30, 40, 50 bucks a month. Anyway, so the value is there. And again, they are one of the most legit in the world. They pay out millions of dollars. Great way to learn how to day trade. And in the futures market, you can day trade the S&P, the NASDAQ, the Dow, the Russell, gold, some currencies. And so it's a great way to learn day trading. And the patterns are very similar to blue chip stock patterns. And so if you want to check it out, you can check out the link in the description. You can also check this out here. We appreciate the love. Thanks so much. They are a sponsor. They pay me money. I am biased because of it. If they paid you money, you'd be biased too. I do trade off stream. You're not going to see all my trades. Do not copy me. I'm not an investment professional. I'm one of the top 3 best and worst traders of all time ever. Don't copy anything I do, anything I say. I might be wildly wrong about all of it. Understand CFTC 4.41 hypothetical or simulated performance has limitations, guys. Do not copy me. Yeah, top 3 plugs in the world right now. Anyways, Tesla up there. We got Nvidia bouncing above those big milestone levels we mentioned right here. We have all these milestone levels. We'll see if it holds. We got the Q up there at 481s. Mostly, I think we could get choppy sideways action today. I think we got the Fed minutes report. We got the labor revision data at 10 a.m. Tomorrow, we got jobless claims and PMI data. Friday, we have Jackson Hole's, the biggest economic conference of the year is Friday. Jerome Powell speaking. It's a massive, massive, massive report. Hey, thanks, Tiny. You stay safe as well. I appreciate the love. Thanks so much. Appreciate you joining the stream. Yeah, so TopStep X is also a really cool platform too. Let me pull this up. Yeah. So yesterday we made some money here, you know. Trying to see my graph. I wish it showed my graph. There we go. So here's me yesterday, right? And granted, we were down a little bit. But our losing trades were a little bit bigger than our winning trades. We did have 84% accuracy, over $1,000 yesterday. So we could do a little bit better win-loss ratio, but our profit factor was 3.56 to 1. Really useful. And again, here's Top Step X. They use trading view charts. Pretty cool. I like them a lot, you know. I'll trade a little bit later, closer to the opening bell. I'll probably trade a little bit now, too. You know. All right, so we got 4 contracts here on Top Step X. We got a little bit of a cushion. I'm going to take half of it off there. We got 2 contracts left. I'm going to scale down here, take a little bit more off there, let it rise. Maybe add to this contract a little bit, see if we can manage the trade better. If we reject here, we'll get out flat on the rest. All right, we got a little bad fill there, but that's okay. We'll go ahead and cut that. All right, so we're up about $300 today, maybe a little bit less, maybe a couple hundred. But so far, so good. Trading on Top Step X. Yeah, we're definitely going to stream Nvidia earnings. Nvidia earnings are our largest stream we've ever done. We had over 100. We had almost 100,000 views. 14,000 concurrent views. Who's shorting Nvidia? I'm definitely not. All right, guys, remember here, chat. So remember, we have the labor and payroll revision data. All right. Yeah, let me get this ready. We got about 20 minutes. 20 minutes. Get the pre-market thing done. All right. Yeah, so I'm looking at payrolls. See how many people tune in for this big labor payroll revision data. So again, so yeah, if you want the Top Step link, just go to the description and you'll find it. I already posted it. You can also just scroll up and find it. We're not posted it, but it's also in the description if you want to check it out. Hey, all good, Derek. Yeah, it's all good, brother. I appreciate the love, man. It's all good, dude. Make sure you're not too delayed on the stream, brother. Hit the live button next to the play button. Make sure you're fully caught up on stream. We appreciate it. Yeah, I mean, overall, I like both of them, Kenneth. I'm not going to go too deep into it. I think both of them are great. Both of them are useful, you know. Spilling coffee. Bro, it is so cold in my house in the morning, dude. It's so cold, but I can never find my robes. Like, I want to get up and just put a big warm robe on. Honestly, I might buy myself a freaking robe rack. Let me see if I can find one. I need one, dude. Honestly, I'm so cold when I wake up in the morning. My wife, I like to be warm when I get up in the morning. My wife likes it freaking Antarctica in the morning. I should probably ask her before I buy this, but I'm going to get some type of rack. I'll ask her first which one she would rather have. And then I'm just going to buy a bunch of robes. I'm going to hang like 5 robes on so I never lose it. Yeah. All right, guys, we got 15 minutes. Wool socks are warm, yeah. Yeah, Nvidia back up to 120 still, looking pretty strong. I think if Nvidia, I've said this I've said this once, I'll say it again. If Nvidia can just hold its gains that it's made over the last few years, it's doing good. It doesn't need to break highs. It doesn't need to continue up. It's had such a massive effect on markets as well as massive price gains that if it could just hold these gains for a few years, I think it's okay, you know. What I don't want to see again is Nvidia start to turn all the way back. If Nvidia drops down to $70 a share, that's bad. That's risky. And so I just want to see Nvidia hold. I don't even need it to break highs. I just want to see it hold. So we're day trading a little bit here. I'm going to take a piece off of this. We're up about 30 bucks. This is an actual 50K funded account. Take a little bit off there. Take a little bit off there. We'll just scalp this little $30 gains on our actual funded account. Come back to it. We're going to trade some stocks too. Looking at our poll numbers here, we said, does the market close red or green? 51% still think red over almost 800 votes. Maybe more than that. Close to 800 votes. Are you buying Louis Vuitton Monet Hennessy? I mean, Bernard Arnault, again, I've talked about this correlation a lot. Like, LVMH did really, really well from the pandemic and the quantitative easing, the money printing, the inflation. Like, so what benefited them the most is after 2020 and the pandemic, the Fed tried to save the economy from the pandemic through lowering interest rates, printing money, injecting liquidity into the economy and stuff like that. And they also sent out stimulus checks as well, right? What a lot of people did with their stimulus checks is they bought dumb stuff like luxury goods. Like Rolex prices doubled. You know, if you look at Vegas and like there's these luxury market centers in Vegas where all these people, there's like Rolex stores and Omega stores and Breitling stores and Louis Vuitton stores and all these, and Gucci and all this other luxury goods stuff in Vegas. If you saw that right after, you know, if you saw that shortly after the QE, shortly after the stimulus checks, shortly after the, reduced interest rates, that area was packed full of people. And so, again, Rolex prices doubled. Like, a lot of these luxury good items appreciated. And, again, that massively benefited Bernard Arnault and Louis Vuitton, Hennessy. All those luxury brands benefited massively. Even, like, Louis Vuitton, right? Like, my wife likes some of their stuff. Like, she has some purses, right? Like, it used to cost, like, $4K for a good-sized purse. Now you want to buy a good-sized purse, it's like $6.5, So, like, those went up as well. That benefited him a lot, And these luxury goods. Now, we're correcting a little bit. If you look at, like, Rolex prices specifically here. Right, if you look at Rolex prices, right, so here's the correlation of it, right? So here is, if you scroll down here and you look at like the actual dates behind this, right? So here's 2020. Again, 2020 we're kind of, chopping back and forth. 2020 happened, boom. We spiked up massively. Same time inflation spiked, these prices spiked as well, And really, me as like a dip buyer, I'm kind of one that likes buying dips. This is, I usually, if this was at a stock chart, I might think about buying this, right? Because then I'm thinking it's going to be a stair-step pattern like that. I don't know. But, in terms of buying luxury stuff, maybe there's, especially like watches. I'm a watch guy myself. I don't know what Patek and like the other watches are looking like. Let me see. Patek Philippe. Yeah, Patek Philippe is even nastier chart here. So Patek's down, on a 5-year chart, they're up 73% though. And generally speaking, watches, at least Rolex, Patek, the super high-end ones, generally keep up with inflation and beat inflation to a certain extent. Like they'll perform similar to the S&P or the NASDAQ. If you look at them in the last 5 years, they're still up 73%. So nothing's guaranteed. Anything could happen. You could always have good and bad reactions. But just in terms of store value, I don't think watches are terrible. You could buy a nice watch. Say, like, if you buy a Rolex right now, you're going to pay anywhere between generally like 10 to 20K for it. You could buy it, wear it for a few years, and sell it most likely for more than you bought it for, And so that's something a lot of people do. That's something a lot of people also don't understand about watches, Like, a lot of people live above their means, but I think watches are the one aspect of it that it can make sense to buy and sit on. Again, Omegas are different. Omegas don't hold their value as well, but they're up there. They're still really nice watches. Rolexes generally hold their value over a long period of time. So do Pateks. Anything else though is like APs are nice, Omegas are nice, Breitlings are nice. Richard Milles are nice, but they're generally not going to hold value like some of the other more. Which stock will break into the $1 trillion market cap next? I don't know. Hard to tell. I'll tell you this. It's probably going to be a tech stock. It also could be like Costco or something like that. Costco's massive. What's Costco's market cap? Let me look into this. Yeah, so market cap has about 400 billion, 389 billion market cap, so it's still got 600 billion to go. But you know, that's a little bit over 100% gain. If it doubles, it's going to be close to $1 trillion. So maybe Costco is my guess. It might take a few years, but I think if Costco continues its trend now, again, I'm not telling you to buy it. I genuinely have no idea what it's going to do. No idea what it's going to do. But I think Costco is picking up steam, looks strong, and it's still packed every time I go there. I'm talking Eastern time, not Central. Central time is, it's 9 a.m. Central time. All right, guys. Gold, pull it back. We still got 7 minutes left until the market opens. About 30 minutes until this big data report comes out. Yeah, I base it off of. I usually base it off of market time, so Eastern. So I'm usually basing my stuff off of Eastern. Yeah, I'm not telling you to buy anything. If you lose, Costco might crash tomorrow. I don't freaking know, bro. Yeah, I'm not sure which ones you're talking about, Noodle. I don't think there is a Dive Master. Or a Rail one. I've never heard of those. You might be talking about Submariners. There's what's called a Submariner Rolex. You know, you also might be talking about like GMT Master. That's what I'm assuming. So GMT is Greenwich Marine Time. It's like universal time. It's what pilots and other people use as like a universal time. It's like you know, so it's called GMT or Greenwich Marine Time. Greenwich Mean Time, yeah. Not Marine Time, Mean Time is what it is, sorry. Submariners are a diver's watch. Do you think we have another red day? I have no idea. I have no idea. Yeah, they're revising payrolls today. Yes, this is a big payroll release. They're revising non-farm payrolls today, yes. All right, guys. Let me update this. All right, so we're gonna get rid of pre-market stuff. The Seamaster, yeah, Seamasters. So you're thinking of Omega Noodle. So you're thinking of Omega, brother. Seamaster is there's so Rolex has the Yacht Master. You're thinking of Omega. I know the James Bond watch is what you're thinking of. Like, look, you're thinking of this. Yeah, so this is a Seamaster. Right, like you're thinking of this, which is a Omega Seamaster. There's a bunch of different kinds. The more famous one is the silver, this one right here, right? Rolex has what's called the Yacht Master and the Submariner, so it's different watches, bro. What are your thoughts about the Fed minutes report this afternoon? I think it's a massive report. It might not move markets that much. Everybody might be waiting for the Jackson Hole Symposium Powell comments on Friday. And so I think we might have choppiness today. That's what I'm expecting. That's my guess. See, we're dipping down a little bit also. We're kind of just sitting tight waiting here. We got a lot of choppiness, and the market's about to open up in a minute. So, yeah, like I'm kind of a watch nerd noodle, so I know about watches a lot. I know about Omegas a lot. I know about Rolexes. Yacht Masters are dope. I like Yacht Masters. I like the gold and black Yacht Master. That one's just, you know. Like, look at this one. This is a $30,000 watch, 35K really, but they're cool. This is like FU money watch, I guess, you know. All right, guys, here's the opening bell. Here we go. Let's do it. All right, there's the bell, guys. Let's see what we get. Watching gold, Nvidia, and the NASDAQ here at the opening bell. We'll also trade some. Also, little retracement on the Q. Sorry to bring up GameStop. What's going on with GameStop? GameStop spiked a little bit at the opening bell. Wow, look at GameStop. Nvidia falling, though. Look at GameStop. Is it going to get halted, I guess, is the question. It's a big range at the opening bell for GameStop. Alright, so GameStop spiked, Tesla spiked, Nvidia bounced it up a little bit, still under that previous closing price VWAP level. Look at this big level here. This is a big milestone spot. I'm letting the opening bell play out first. GameStop now, I thought it was halted. It's not. Just be careful. A lot of chop happening right now at the open. Nvidia is right here. So this is the Nvidia chart. Just be careful. It's moving a lot. Whatever happened to Roaring Kitty? Oh, GameStop settled down a little bit. He shows up when volatility gets there, makes his money, and then leaves. And so, yeah, volatility just slowed, like dwindled down for GameStop a little bit. And so he just, you know, like, I think, like, he tried to influence GameStop a ton, but I think he posted so many memes that it kind of diluted it. So GameStop stopped reacting to his memes. And so that ultimately caused like this big price fluctuations and stuff. All right, so we're scalping a little bit on Top Step X today. We bought this dip. We're up 225. Boom. So we're up 718 on the actual Top Step trading account. We're being much more selective on this one. But we caught the range dip. We bought the dip. Wrote it back up here. You know, I think we're going to get choppiness. We got this labor revision data coming out, which is a massive report. Right now, we got so many people talking about it, so I'm assuming it's massive. I don't really know. I haven't really covered a revision data like this, and so maybe it's big, maybe it's not. I don't know. But we also have the Fed minutes report today that should be a big influence. And again, we're gonna cover all of it live, stream it all live. So hit the subscribe button. I'm gonna throw it in sub only mode as well, just so we can, you know, gain some steam. I'm still pumping towards 150,000 subscribers. So I'm still pumping towards 150K. We need about 500 subs to break 155K. And then only 5,000 subs left to break the big 150,000 subscriber level. We're getting close, guys. We're getting close. So what's the timer for? So we have labor revision payroll data coming out at 10 a.m. today, right? So they are revising labor data to show about 1 million less jobs. They're cutting jobs in that way. This is big news. A lot of people talked about this morning. I can see it's scheduled as well, right? So last time it showed payroll benchmark data. Last time it showed 187K. But it looks like they're revising that data. So we'll see. We're waiting. It's from the U.S. Bureau of Labor Statistics. No, so the Fed minutes is in hours from now. The Fed minutes report is at 2 p.m. Eastern time today. So it is about 9:30 market time, 9:35. So we still got time. Kind of flat open in Nvidia. I think we're gonna get choppiness today too. I think we got too much stuff going on to like significantly trend in any one way. Although again, I might be wrong. Like I might be wrong. Hey, thanks CW. So the labor revision, the payroll revision data comes out in 25. So far, so good, though. We're up a solid amount today. Like, this is my calendar. One of the reasons I like Top Step X is because it shows you your calendar. First day I lost 920s. Second day I made over 1,000. Today we're up 620s. See if we continue this trend. Nice little bounce so far since the opening bell. Again, Nvidia pumping up to 128. I'm gonna short. I'm gonna pivot to more of a short-based strategy here on Top Step. Add to a winning trade. We'll give it one more second and then we'll cut it. if it doesn't work. There we go, back to green. There we go. A little bit more off. Grind the rest out, so we're up to about 830s. Made a little bit on that trade too. Again, we're attacking choppiness. GameStop testing highs of the market open right now at 2020 or at 2250. Again, I think we're gonna get chopped today. That's my guess. I've been thinking that every day though. We just got a lot of economic reports in the following 3 days, and so I think generally as we lead into those reports, we get sideways action a lot of the time. Tesla up a little bit though, bouncing right at the previous close. Nice. That's cool. Again, hit that sub button, guys. Hit the notification bell. I appreciate it. Everything we do here is free. We don't sell a course, don't sell a service, don't claim to be experts, don't act like gurus, don't charge for anything. Cover all the big economic reports, data, earnings, all that stuff live, like we always do. Chop, chop. Yeah. So the NFP revision data is today, right? So again, I'll give you some perspective into what this is. This is how I love using AI, right? So the Bureau of Labor Statistics, BLS, is releasing a revision of the non-farm payroll data today. It's part of the preliminary benchmark revision to establish data. It's expected to make significant adjustments to the previously reported job growth figures from April of 23 to March of 2024. Analysts predicted that this could result in a downward adjustment of up to 1 million jobs, which would be one of the largest such revisions since 2010, which is about 14 years. So it periodically revises employment data as part of benchmarking. Its revisions are based on comprehensive data from the quarterly census of employment wages, which often provides more accurate picture of the stuff. This particular revision is significant because it could show that job growth previously reported was overestimated by 600,000 to 1 million jobs, right? And again, it's going to have implications towards the economy, leading into the Powell speech and then stuff like that. Yeah, Nvidia pump it up though. Nvidia up to 128s. Looks good. All right, so I'm scalping this 50K funded account as well. Here we got 2 contracts left, but we already made a little bit. I don't know if I'm going to add any more to it. I like attacking the top of the range, and I feel like we're going to get chopped. We got 4 contracts now. 6 contracts now. I don't mind going a little big here, hoping we reject and we come back down. There we go. All right, we're going to take part of that off. Take another piece of that off. Another piece, another piece. So we're up $100 now. Not bad. We'll continue to try to play this edge. Have I read all these books? No. I haven't read a quarter of them. But it looks cool, right? No, I like reading. I'm a reader, but yeah, I used to have a used book business that I would, I'd sell used books. Good arbitrage. Like I would buy used books at thrift stores for 50 cents a dollar. I had a scanner that would scan the book, the barcode, and it would. I had the database downloaded to my phone, and so I could just scan barcodes, and it would jingle if the book was the lowest selling price on Amazon was over $20, and so I would just scan. If it was worth $20 or more, I would buy it for 50 cents, a dollar, sell it on Amazon for really good margins. You know, I did that for years, made, you know, thousands a month doing it a lot of the time. And, you know, it was a good little business for young John. But, you know, eventually I gave it up. I just didn't have time for it anymore. And it also got kind of saturated. And so, you know, a lot of cool books still. I had this big collection of books. I just kind of used it. I'm generally bullish on Disney. Long term, but short term is volatile. I don't know what's going to do. Nvidia earnings are next Wednesday, so in exactly a week from now for Nvidia. Yeah, does sound bearish. I don't know what we're going to get, though. All right, guys. Yeah, it's 10 a.m. I don't know if it's good or bad. I hope it's good, but I think a lot of people are expecting it to be bad. Right, so it's 10 a.m. It drops in 15 minutes. Nvidia went all the way up to 128, pulling back to it now. Let's see if it holds. Tesla at 122s or 222s. Tesla at 222. Tesla very flat. Q is now under the VWAP 200 EMA. Again, I'm expecting choppiness. I've already made a good bid on most of my accounts. And so I'm just kind of sitting tight now. We're in the middle range. I'm not really trying to play that. 15 minutes left until the data releases. So we're just kind of sitting tight, waiting. Nvidia bouncing up a little bit. Trying to come back down some. We'll see if it holds. Back down. Flushing all the way back down. So I'm doing the same thing. I'm kind of attacking a range here on my actual funded account. We got one contract left. Yeah, you see we're up about 123 here. You know, I think everybody's always excited to attack breakouts and these big breakouts and all this momentum and stuff like that. And I don't find that to be the best edge, personally, you know. I think it's much more predictable to get choppiness on good days, like big economic release days. Choppiness is much more predictable. Yeah, we might have choppiness until the data release. That's what I'm assuming here, at least. I don't know. All right, guys, Nvidia up to 128.50s. So Nvidia just broke highs, dragging the Q up, dragging everything up. And again, maybe I'm wrong. I don't know about sideways choppiness. We do have economic report in 13 minutes. And so it's a pretty big report, I would assume. I don't know if it's 5 green days in a row, Jay. Or top step, yes. I don't think it's a row. I think you just have to have 5 green days. So it's not in a row. I don't think it has to be consecutive. I don't think, yeah, it's not. I'm pretty sure it's not consecutive. I'm pretty sure you just have to have, like, it might be 5, might be 10, but it's something like that. Tesla at 223s. Do you think Nvidia will moon on earnings? Hard to tell, brother. Hard to tell. I don't think there's any way to really tell. We don't know what the earnings are going to be, and we don't know what the reaction to the earnings are going to be either. Yo, yo, yo. Morning. Best #1 show on YouTube. This is like the only show that I watch and think and watch the show. I can work and think and watch the show at the same time. John has very smooth shows. He just does. Hey, that's what we're here for, brother. Appreciate it, man. Thank you, John in chat. Hey, thank you, Lolo. Have a great day. Apple about to break 227s. GameStop still getting close to highs. The volume's not really where you would want it to be if you want some big momentum for GameStop, though. Again, Apple up to 226, almost 227s. Yeah, 5 $200 plus days non-consecutive. Yeah, that's what I thought. I didn't think it was consecutive. Hello. All right, we're back. Yeah, this show's my morning coffee. Hey, nice, man. Appreciate it. Agree, this is why I watch this channel. Easy to listen to. I can work and listen. Yeah, we try. Like, we try, you know. My wife told me the other day, she's like, John, you're just good at talking. You can talk, tell stories, and it's listenable, you know. And so I think that's good. She might be telling me I talk too much. That might be true, too. But, hey, top 3 talkers in the world right now. Nvidia pulling back a little bit now. Hit the highs. Again, I still think we're going to get chopped. I appreciate it. Best channel to trade and chill. Hey, thanks, man. Yeah, y'all keep it up, yeah. And y'all are, you know, my head is so big after this, man, you know. Y'all are not helping my ego here. Y'all are just like, John's the greatest. He's the nicest guy ever. He's the friendliest guy, the smartest guy. He's the best trader, top 3 for sure. You know, I appreciate it. No, I appreciate it. Try singing? No, you're going to have to pay me more for that. All right. Anyways. Apple, very choppy. Look at Apple. Apple's been in the same sideways range. I don't even know how far this goes back, but look how choppy this is. And I think identifying a choppy stock and then attacking the range makes sense. You know, I posted a video about this, and some people get so upset. I'm like, hey, guys, identify choppiness. You can buy the bottom of the range, sell the top. It's one of the easiest strategies. And they're like, oh, bro, you're just telling me to buy the bottom and sell the top. It's like every strategy in the world could be reduced to just that if you want to be critical. But I think it makes sense. You know, I think it makes sense. Like, find stocks that are choppy. It's much more probable, instead of trying to trade big breakouts and range breaks and momentum, it's much more probable that they're just going to continue to be choppy for a little while. And you can piggyback off of that choppiness. Really easy. You know, again, if you wait for FOMC meetings, you wait for CPI reports, and you trade ahead of those things, what do you get? You get sideways choppy action a lot of the time. You know, you buy the bottom, sell the top, short the top, sell the, you know, cover the bottom, whatever you want to do. It makes sense, I think. And it's kind of like an underappreciated strategy, I think, as well, because of all the, you know, like you got like influencers jumping out of bed, which is just completely unrealistic. They're jumping out of bed and they're saying, oh, this stock is running, guys. Go, go, go. Like, do it now. Like, get to the chopper, you know, and it's just kind of like, that's not real. Real trading's boring. It's not the most entertaining thing. I mean, I know you guys got me here talking to you, but real trading's boring. You just gotta wait most of the time. And if you can learn to wait, there's a very famous quote: "Trading's made in waiting, not trading. Money's made in waiting." It's something like that. Anyways, Tesla just broke highs. To go back to something more exciting. Tesla up to 224s. Definitely not advice. Top 3 least advice giving traders in the world. Definitely not advice. I have no idea what I'm talking about. I'm wrong about everything. Don't copy me. Not an investment professional. Don't sue me. I have no idea what I'm talking about. I trade off stream. I might be wildly wrong about anything I say. Don't copy me. What's up, Foo? Yeah, it's all good, bro. Is that a Friday quote? Or it's Craig. Sounds like a day quote, so it sounds like next Friday. My favorite was next Friday. Maybe I'm from the suburbs, so it's more relatable to me, you know. All right, guys. Nvidia pull it back sideways. You know, we got 6 minutes. We'll see what happens. Got about 700 people watching. We appreciate you guys. Thanks. Tesla's still up, breaking highs up to 224s. Looking really strong. And I don't know if we're going to get bullish action leading into the robo-taxi event. We'll see. Yeah, consolidating, you know, sideways, choppy, you know, neutral, chop city, whatever you want to call it. There's a lot of slang in trading, as well as like complicated jargon that people use. But yeah, choppy just means sideways. Neutral range. If you look at Apple as an example, it's probably the best example right now. Like I said, Apple on like a short-term chart, looking at the last few days. Like, this is a good example of choppy, just neutral, you know? So, just kind of up, down, up, down, up, down, up, down, up, down, up. And so, in this situation, it's much more sensible to buy at bottom range, try to cover at top range. Looks like a hamburger. But yeah, it's much more sensible to do that than try to wait for some, like, breakout here and go up. And these can be profitable buying that support hold. But a lot of the time, they're just going to go bloop, back down, and it's just not gonna work. You know, experienced traders usually take profit at the top of these ranges too, right? Because they're attacking the range. It's one of the things, like I always say this, but it's absolutely true. High of the day breakouts are one of the most overstated strategies that you see. Like, high of the day breakouts do not have that big of an edge. Half the time you do it, they're just gonna dump on you and just come right back down. And it makes sense why, because experienced traders just cover at the top. They sell at the top, not buy it. And so even if we break the range, a lot of the time it can be like a trap that just kind of covers against you. But for whatever reason, traders just get super stubborn with them, you know. And I say this multiple times regularly. Like, I say this over and over again. I'm repetitive with it because it's important for some new traders to hear what I'm saying. Because, like, if you find yourself in high of the day break purgatory, you know, maybe hearing me say this might make you stop and realize that, like, the most basic day trading strategy is probably not the best one, you know. But as with most in trading, like, it can work in certain situations, certain sectors of trading, like maybe penny stocks and stuff. All right, guys, here we go. We got 3 minutes left. Yeah, I think it was like Charlie Munger or somebody who said the money is made in the waiting thing. All right, guys, we got 3 minutes. Yeah, so the economic data drops. Big data release too. I don't even know. Let me see. Hold on. Yeah, I think it's big data. Again, I've never really covered it before. I hear a lot of people talking about it, and AI basically was like, yeah, it's important. Basically, they overstated the jobs by up to 1 million payroll jobs, and so a lot of people are panicking now, thinking they're. And this is from last year to like spring this year, but a lot of people think it's gonna like be some big influence over markets. Again, we'll see. I don't know. I don't know. I'm assuming it's big. I don't know how much it's going to affect stocks. It's more signaling economic strength or weakness. Like if they take away jobs in a massive amount over expected, then that signals a much weaker economy over the last year and a half than originally thought. And maybe that has implications towards like, you know, what the current state of the economy is and what the state of over the last year. But I don't know. Yeah, I don't know. We'll see. I'll cover it when it drops, whatever it is. We got a minute and a half left. Hit the live button next to the play button. Make sure you're fully caught up on stream. Yeah, we got like a minute and a half until this report comes out. It's by the Bureau of Labor Statistics. All right, here we go. 30 seconds. 30 seconds. Here we go. $20 seconds, guys. Hit the live button next to the play button. Make sure you're fully caught up on stream. We appreciate it. Let's do this. Again, today is Wednesday. We got the Fed minutes report later. Waiting on this payroll benchmark number. All right, here we go. So there's 10 a.m. on the dot. We're waiting for this to come out. Yeah, waiting here, Chad. I don't see any update yet on it. There's my timer. Yeah, so far, I'm going to put the SPY up here. The Q is ripping up on this report. Ripping up big on this report. The Q's up. Nvidia's up. Look at the Q. Q is up big. SPY is up big. And the report says, again, we're waiting on it. Yeah, so all right, so again, mine isn't updating here. I don't really see much difference. Waiting for it, but markets are actually up a lot. Yeah, I'm looking to see if I can find the data here, but I don't really see it. Yeah, 1.1 million data revision. Yeah. So, market went up a lot. Let me look at the Bureau of Labor Statistics. Let's see what they're saying here. All right, so here, 1.4 million to 21.3 million. Yeah, I don't know if they're late or what, but the market reacted to it. Yeah, so the market's up big. Yeah, we're mostly looking at the market's reaction to this point. And the market reacted huge. It's up a massive amount. Market positively reacted to it. Look at Nvidia bumping up higher as well here. Yeah, I'm looking at the Bureau of Labor Statistics. Let me yeah, so I'm looking it up. I just don't know if they're out yet. Tesla actually completely turned. But the market did react very positively to it. I just didn't see an update anywhere. Like I'm looking at Benzinga, I'm looking at Market Watch, I'm looking at Bloomberg. You know, and I saw this scheduled on Bloomberg. I saw it scheduled on Market Watch. But I'm on the labor website here. Tell me if you guys can see where it's supposed to come out. Like this is the data from yesterday, August 20th. But this was yesterday at 10 a.m. Here's the latest numbers. Yeah, 114K in July, unemployment at 4.3%. We can look at publications, maybe. Reports. Yeah, I don't see anything either. So, y'all hit the live button next to the play button. Yeah, appreciate all the kind words. I don't see the report. It's supposed to drop at 10 a.m. according to Bloomberg and Market Watch, but I don't see it. You also have Trading Economics. You can look at like their calendar as well for today. And we're supposed to get the non-farm payroll annual revision data. We just don't have it yet, you know. We can also look on like Twitter, but usually Twitter does a good job of displaying it. Yeah, so don't have them yet. From a lot of people are stating we just don't have them yet, so we're waiting. So again, they're speculating to have changed them from 600K up to 1 million. A lot of people are saying that's really weak. But and the markets are up. Like the NASDAQ is up, Nvidia is up, the SPY is up. I think they're just late releasing them. Everywhere I look, I haven't seen them. And this is from Trading Economics, Bloomberg, Market Watch. So just sitting tight, guys, waiting. I'm gonna refresh this. Yeah, nothing yet. We're here, we're waiting, guys. A lot of people can't see them, you know. They're looking for them, don't have them. From a lot of sources, too. Nothing yet. Very strange. I know everybody's waiting. Listen, I can't make them release it earlier. You know, we're doing our best. Again, I'm checking all the different sources. I'm checking Trading Economics, Bloomberg, Market Watch. Benzinga, nothing's really out yet, unfortunately. And I'm looking at their website, too. Usually they'll drop it here. Yeah, I'm looking. This is supposed to basically be a revision of payroll numbers. So Coffee time? Yeah, I don't know. We're waiting. Again, it's supposed to be at 10 a.m. Eastern, which was 7 minutes ago. A lot of places had it scheduled, not just me. Trading Economics, Bloomberg, Market Watch. Yeah, so CNBC still waiting for revisions, so just gotta sit tight. We're waiting for them, guys. They should be out. Yeah, just watch for volatility in the markets. That's when you'll usually know the report's out. SPY pulling back on this report. Q pulling back on this weighting of the report, I mean. This is the best channel? Hey, we try, bro. We try. The report's not out yet. They're late. Everybody's sitting tight, waiting for the report to drop. Hit the subscribe button. Listen, we cover all this major stuff. We'll also be streaming the Fed minutes report later. At this point, we're just waiting for the report to drop. We're on the website too. Typically, the Bureau of Labor releases their reports on time, but occasional delays can happen due to various reasons. Still waiting for the updates. So sit tight. All right, so here's a spike really quick. A little bounce in stocks. I don't know if it has anything to do with this, but we are bouncing up a little bit here. So Martin, all right, what are you saying? I am a professional streamer. Are you trying to plug yourself or are you making fun of me? Let's see. Waiting here, chat. We got a little bit of a pop. Still waiting. All right, so we got the EIA expectations, crude, distillate, gas. Nothing out on this report, though. CNBC still waiting. I'm going to mute the music so we can give you guys this report as fast as we can. Sit tight. Yeah, we're waiting on payroll numbers. Look at that Bloomberg. Still nothing. Last time it says, Bloomberg says last time it was minus 187,000. Minus 187K. Usually they'd update it though, but the market is flourishing ahead of this report. Thank you for your work. Hey, we try, bro. We try. Somebody knows something. I mean, the market's up. It's hard to tell. We were already in an upward trend essentially since the opening bell, so it's hard to tell whether this is from the revision data, like knowledge or what. But we're sitting tight, waiting. Still spikes. Look at Q breaking highs. So a lot of people are saying it could have a big impact if the revision is at 1 million jobs like it's being reported. This could have a big influence over markets. So we're just waiting. Watch for big volatility spikes. Yeah. According to Market Watch, nothing's out. And I agree. I don't see anything yet. We're supposed to have data here. All right, so there's a red candle. TikTok goes the clock. We're waiting here, chat. I don't know what's going on. Payroll data is not out yet. Checking stats, nothing yet. Watching for volatility, nothing yet. Trading economics, nothing yet. Yeah, I see the county data. It's not there yet. Yeah, if it's over 5 or 600K, it'll be the largest. If it's over 500K, it'll be the largest since 2010 is what it is. So yeah, the whole economic world is saying the same thing as me, right? So we see everybody's waiting for the payroll numbers. Watch for 10 a.m. All right, big downward pressure here. So this is almost certain the release. So it looks like the release is probably out right now. We got a big downward pressuring move. It looks like the release is finally out. Let me cover this. Let me cover it. Big downward pressure. Finally, man, they're out. It looks like. Let me refresh this. Waiting. All right, so checking out the site, the Bureau of Labor Statistics. No, that's not it either. But big downward pressure. It looks like the news is out. We just got to find it now. Finally. Big downward pressure. I still don't see much updates on it, though, but we'll find it somewhere. It looks like it's out. It doesn't look like it's good, though. I'm assuming it's higher than 500K. If you guys find the numbers before me, let me know. I'm looking for it. Not out. Wrong movement. Yeah, I don't see it out either. I don't know what's dragging the market down. Maybe fear from this. I would assume it was out, but man. And nowhere I look, my normal sources aren't showing it. No payroll revision data here. I'm assuming something. And I'm looking on the website. I don't see it either. Big decrease. Yeah, so S&P, NASDAQ both had a big drop. No word on payroll numbers. I don't know if the payroll data is being digested ahead of time or what, but that's a big decrease here. Again, everywhere I look, it's not showing anything for payroll numbers, including the Bureau of Labor Statistics, which is really where it's supposed to show. I'm looking around here, but... And again, I usually, like everything we cover, if it's on time, we cover it immediately. So this is odd. You know, now we're bouncing back a little bit. I still think we're probably going to get choppy behavior today. We got the Fed minutes report later. But, Yeah, so this is revision data, is the benchmark employment level for a given period. Overall, this is updating the accuracy of the labor reports that we've gotten from last year to spring of this year. The website is going to be on the Bureau of Labor Statistics website. It's right here. I'll give you the link if you want to look it up yourself. But again, it's just not out yet. Looking at publications, producer prices. Looking at economic releases. Today is the 21st. County unemployment wages, first quarter 2024. All right, so this might be it right here. All right, so here it is. I found it. All right, I found it. Hold on. I'll put the report up in chat. So here's the report right here. For county and labor movements. Bear with me, chat. I think this is it. Maybe I'm wrong though. I would assume they would update it elsewhere, and I haven't seen it at all updated anywhere. Okay, so I'm gonna have to. All right, so we did get a big spike up here. Employment increased by 1.3% over the year, reaching 153.6 million. But yeah, I'm trying to wait, but I don't know if this is the report either. Because I don't see it updated anywhere, Market Watch or anything. Let me see. There was a 500K downward revision in 2019, a 462K up revision in 2022. Hello. Hey, baby, I'm streaming right now economic data that's supposed to come out right now, baby. I love you. Okay, I'm going to have to call you back. All right? Okay, I know. Look, I love you. I'll call you back, all right? All right, bye. All right, sorry, guys. 160 million payrolls in the U.S. A 1 million revision is a 0.6% swing. I don't know if they postponed it or what. There's still not much of an update. They say it's delayed by 20 minutes. So I'm assuming. It says release of the prelim U.S. payroll data is delayed by how much, though? When does it come out? Does anybody know? What is it saying? Nothing but a trap. Yeah, so it's delayed. I'll put this up on screen. But, unfortunate, it's delayed. Yeah, no, I love Carol, you know. Again, that's why I say, hey, I love you. But I'll call you back, you know. Yeah, so a lot of people say it's delayed. I'm trying to cover it, but 10:30 apparently. Yeah, so we got about 7 minutes. Yeah, so the payroll benchmark is minus 107K. That's last time, right? So you're looking at what happened last time. That is the previous report was minus 187K. All right, so this is the updated version of that. So again, we're waiting 7 minutes now, I guess. So it's all good. Freaking Bureau of Labor Statistics. All right, guys. Well, hey, listen. So we got 7 minutes. Market's very choppy, very flat, very neutral. Nvidia is really what's leading the market. We got Nvidia sitting at 128, right at the volume-weighted average price. The NASDAQ has gone up and down, big range. I don't know if the delay caused this big drop. I think that's plausible that the delay caused this big pullback. Oh, y'all can't hear the music. Okay, my bad. There you go. Yeah, Gatsby, man. You're trying so hard, bro. He said, yikes. Blew off the wife for a garbage jobs revision. A normal phone call, sure. I mean, listen, she can be okay if I don't answer the phone. She understands. As soon as I said, hey, I got a data release, she said, oh, okay, call me back afterwards. Right? Understandable, right? Now we just gotta wait 6 minutes. Hey, what's up, Casey? It can only get worse? Yeah, I don't know. We'll see. So the initial report was wrong. I wouldn't say wrong. I would just say inaccurate. Like, they have to update the accuracy. They do this with GDP data as well, right? So the first GDP data that dropped a couple weeks ago was called initial estimate GDP. It's the least accurate of the 3 GDP reports that will drop regularly each month. There's the initial estimate, the first revision, and the second revision. The second revision is the most accurate, right? The initial one's the least accurate as they gather more information. This is pretty standard in terms of economic and government data. It's pretty normal. It's kind of how it goes. Yeah. 306,000 revised down. Really? Yeah, I'm waiting to see it. I can't just go by. Some people are saying it's 300K revised downward. But again, I want to wait to see it reflected on like big sources first. I don't want to just tell you guys something. So I guess this music is fitting now. Payroll? Yeah, nothing yet. We're waiting. They say it was revised to some people are saying 9:30 or 10:30. A lot of people are saying it's moved to 10:30 market time, so we're waiting for 10:30. So again, updates potentially 10. Possible. I'm gonna put it possible because I don't know. Yeah. I'm gonna put possible up. I'll put delayed. Yeah, so 306 was last year. All right, guys, here we go. So again, they're saying it's updated on all the sources to 10:30. So we're waiting on that. Again, I don't know if that's going to be accurate. Okay, yeah. So even so every major economic calendar has that updated to 10:30 time. So 10:30 Eastern. We got two minutes exactly right now. 2 minutes exactly until this payroll report is out. 2 minutes exactly. All right, let's see what it does to the markets. 2 minutes, chat. So they're late. We're on the site ready. If you want to try to find it on the site with me, you can go, bls.gov is the site. Less than 2 minutes, chat. Hit the live button next to the play button. It looks like it's delayed to 10:30. All right, guys, a minute and a half left. We got the SPY, the Q. I'm going to put gold up on the left side so we can kind of look at it. I could either do that or like the Dixie. All right, let's go. This should be the final report, though. We got a minute and a half left. Here we go. All right, guys. Tesla 221s chat. All right, here we go. 30 seconds. 30 seconds. We got every major economic watcher here. We're waiting. 20 seconds. 20 seconds. Yeah, they all basically were adjusted. We got calm music ready for this one here today. All right, here we go. 3 minutes. Or really, we got like 30 seconds, chat. Or we got like 2 seconds. All right, here we go. Whoa, it just changed colors. You saw that? That was weird. Waiting. It's supposed to be out now. The crude data just dropped. No updated yet. Not updated yet. Not updated yet. Still no update, no market movement. Come on, Bureau of Labor Statistics. Bro, I swear. If they don't report it now, I'm disappointed in the Bureau of Labor Statistics. Top 3 worst bureaus of all time ever in the world right now. Basically no market movement. Gold actually down a little bit today. But still nothing. Still no movement. Yeah, it's supposed to be 10:30. Still nothing. All right, guys, so there's still waiting here for this. Benchmark revision to NFP likely to be around 900,000. QCEW data shows employment rose 2,042K in the year of March versus 295.70K for November. So a lot of people are speculating that it might be around 900K. But again, we don't have the minutes out, or we don't have the report out yet. It's still not out. It's still not reflecting. You can see there's still no market movement. Honestly, again, just to clarify, guys, this has nothing to do with me. Every major economic source is covering this right now, and they just still haven't dropped it yet. It's kind of disappointing. Usually they're better. But we still basically have no movement in markets, so you know the report's not out yet. Still waiting. Yeah, I don't know if it's going to be 9. Okay, there's a drop. There's a drop. Okay, 818,000. 818,000 is the report. 818K. The revision was 818K. So subtract 818,000 jobs is what this report is. That is why the market. So it's under a million. It's over 600K. This is the largest revision to payroll since 2010. All right, since 2010. Again, it showed up at 818,000. 818,000 is the revision number. 818K, guys, is the report. So it's finally out. Again, and it showed 818,000. So this is the largest job revision since 2010. This is in 15 years. Almost a million jobs. 818K. So it depends on how you look at it. It's not the big negative reaction that a lot of bears wanted. It's not the million jobs lost that people wanted, but it's close, right? It's close. It's definitely not good for them to revise jobs in this significant of an amount, but it's also not as bad as some people thought, right? And so it's kind of, I wouldn't say it's good or bad. It's 818K. We'll put this up on screen for the payroll revision report. 818K. There's the report right there. So again, that's the report. 818,000 finally out. Yep. Poof. All right, finally. Yeah, market didn't really negative react that much, man. So it didn't really negatively react to it. $818K. Market's actually up a little bit from this report. Flat day. Whew. All right, guys. Remember, today we still have the FOMC Fed minutes report at 2 p.m. Eastern Standard Time today. We are going to stream the entire release, the entire report. We covered this literally as soon as this report came out. So as soon as they actually released the numbers, we covered it. And we will do this live for free every single day right here on YouTube. Subscribe if you haven't yet. It's definitely a big cut. It's the largest cut in 15 years, basically. If you haven't already, again, we are up pretty big on our challenge accounts, our actual funded account. Today, you can kind of see we are up $827 today, $827 total profit in this account today. Not too bad. Profit factor of 1.44, and this is on Top Step X, a really nice platform. If we look at the calendar today, you can kind of see first day we lost about 920s. Second day we made over 1,000. Today we're up about 737 total in our funded account. What Top Step does is they give you a demo, and they test your skill with a demo account first. If you pass the test with the demo, they fund you with a regular account between 50K up to 150K. So this one is only $49 a month if you use my link. They're going to give you a 50K demo. If you can make 3K without losing 2K following their rules and conditions, they fund you 50K, 90% split, and they pay out tens of millions of dollars to their trader. They're one of the most legit in the world. Their funded accounts have some of the best rules for funded accounts in the game. And again, they're one of the most legit in the world. You can see how much they pay out. Great process. It's a little bit harder to get funded, but honestly, it's a lot easier to stay funded once you're with them. And so it's a great platform, great option. Again, if you want to check it out, great way to help support your channel. And Top Step X, honestly, one of the best platforms in the game. You can kind of see my stats since starting this challenge here. And my other funded account, I'll put this link up. If you want to check out my sponsor, which is Top Step, or my affiliate, I should say, which is Top Step. Here's the link. Great way to help support your boy here on this channel. I will be back, or I'll be back a little bit earlier than that. Yes, Blob. A little bit earlier than that. But again, 818K is what they showed up as for the revision data. Again, well, you heard it here first, guys. 818K is what it was. And again, we will be back later on today for the revision data. On my other account, you can see we're up about 122. This is an actual funded account. Honestly, the SPY is flying up right now. I wonder why the market's moving like this. Wow. Look at the SPY move. Crazy. Nvidia spiking up as well. Look at this move. Weird. Again, Fed minutes reports later. We'll see what happens, but yeah, interesting. Minus 0.5%. I guess better than the million plus that people were expecting, causing some bullish action. We'll see what happens, guys. Y'all be good. I'll be back later on today. Y'all be safe, guys. Again, we will be back later on today. The Fed minutes report is in about, right now it's what? Almost 11. So in 3 hours, you know, give or take, we got the Fed minutes report. We will be streaming that completely live on stream I love you all. Y'all have a great day. Market spike it up, guys. Will it hold? We'll see you guys later. Y'all be good.